Hey folks, it's Simon here with your Tao Daily for market close Friday the 22nd of August 2025. Friday brought some bullish action to the markets thanks to Jerome Powell's Jackson Hole speech, where he seemed to emphasize the labour market over inflation as a concern for the Fed. And there was one key line in his speech where he said the baseline outlook of shifting balance of risks may warrant adjusting our policy stance. So he's green-lighting a rate cut for September, which the market loves a rate cut. And what we saw on Friday was a relief rally. The markets were concerned that Powell was going to take a stand here, rug pull the prospect of a September rate cut from the market. He didn't do that, and so the market literally had a relief rally. Back on Monday, back on the 18th of August, we were at an 82%. On the 22nd, we're 84%. Right now, we're at 87%. There's been very little change in terms of rate cut probabilities. If you look at SPY over the week, it was up about 0.3%. If you look at the Nasdaq over the week, it was down about 1%. If you look at the dollar, it was unchanged. If you look at bond yields, they were unchanged too. So what we've seen, pull back to the mean, bit of a relief rally here, but the market had a rate cut in September as a lock a week ago. The probability might have increased about 4%. It's really neither here nor there. Looking into this week, the key macro event for this week, of course, is Nvidia earnings after market on Wednesday. That'll be the next event that really helps to set risk sentiment towards equities and AI in particular. Nvidia is approximately 7% of the S&P 500 market cap. It's about 3% of global market cap. So that's why Nvidia earned a big deal. It is almost a $4.5 trillion company these days. So the uptrends remain intact. I don't think now is a time to get carried away with bullish enthusiasm, but I'm certainly not in the camp that we want to get super bearish here either, notwithstanding the fact that September is on our doorstep and September is seasonally the worst month of the year for the S&P. Looking for more concrete signs that cracks are appearing rather than trying to trade opinions or seasonality in isolation. That's what I got for you today, folks. I hope it helps, and I'll catch you next time. Thanks for tuning in.